Great.
Senator Warner.
Well, thank you, Mr. Chairman, and thank you for holding this hearing and your leadership and reform efforts that are going forward. I know the subject today is how do we reform on a prospective basis, but in the interim, as we've seen with the public and congressional outrage over AIG and with certain other actions by a number of our institutions, until we get this new regulatory structure in place, what I think we keep hearing is, well, we don't really have any tools to stop these actions. And one area that I've had some folks talk to me about, and I'd like to get your opinion, is under the Federal Deposit Insurance Act, which obviously all of the federal regulators have the ability to enforce, not only the FDIC, but the OCC, the OTS, and the Fed. My understanding is regulators do have at least the statutory ability to issue cease and desist orders to institutions or individuals if somebody has engaged in unsafe or unsound practices, if somebody has engaged in a breach of their fiduciary duty, or if somebody has received financial gain or other benefits that show willful disregard for the safety and soundness of the institution. And I understand that the case law is fairly narrow here, but my understanding are the remedies you've got is you can ban somebody from banking, you can get restitution, you can impose a series of other penalties. But boy, oh boy, even with narrow case law, it sure does seem that some of the actions that have taken place, and again, case in point being AIG, and I know that the fact that it was offshore, off-balance sheet, and the London derivatives entity, but it sure seems like this tool could be used or could be pushed because there sure has been a whole lot of activities that have led to either financial enrichment or unsound practices, at least in retrospect now. And I just question, have you thought through this tool? Have you investigated? Have you not used it because you felt that there would be the case law wouldn't allow it? And why not take a little bit of risk on pushing the edge, particularly with the amount of abuse and the amount of public outrage that we see today? Mr. Polikoff, do you want to start? And I'd love to hear from all of the regulators.
If I could offer some thoughts regarding AIG. As you know, September 15th, 2008, with the government's action, caused AIG to no longer be a savings and loan holding company. So 6 months have passed since that time. I can assure you that if AIG was still a savings and loan holding company, we would have taken enforcement action under safety and soundness to say those bonuses were an unsafe and unsound practice and would not have allowed it. But it's not a savings and loan holding company.
But I know the government owns, but even though the fact that there is a Treasury-owned trust, you say that, I know you testified here a week ago that, yes, you had oversight over AIG and maybe have missed a bit, and now you're saying you have no regulatory ability to take any of these actions?
Once the government took ownership by statute, it's no longer savings and loan holding.
But the government, again, I know you would know the law better than I, but I thought the government has not taken full ownership, that there is still a trust in which the Treasury and others help put members, but you're saying even though the trust is an independent trust, it is not owned entirely and controlled entirely by the government, as an independent trust, wouldn't you still have regulatory?
No, our legal analysis says that the control is with the government. I mean, we would be thrilled if we could get to the legal status that it's still a savings and loan holding company. It would allow us to take action.
Let me hear from the regulators on the panel, whether beyond just the AIG specific example, whether this tool, whether you've thought through using this tool as we've seen other actions, AIG being the most egregious, but there are other institutions that I think fall into that category. Ms. Baer?
Well, I would say the FDI Act applies to depository institutions, and obviously AIG had a small thrift depository institution regulated by OTS, and OTS was their holding company regulator. But our authority as backup supervisor and PFR, primary regulator of non-member state chartered banks, is only to the depository institution. When we take a bank over as receiver or conservator, typically we have separate authorities to just extinguish, repudiate all employment contracts. The boards are gone, obviously. The senior management is generally let go, and those who were responsible for the bank's problems are typically let go as well. So we do very aggressively pick and choose who we want to keep and who we think needs to leave when an institution fails and we are become receiver conservators. So we do use it in that context. But again, that's just for a bank. The depository institution part, and AIG certainly was a much larger, was predominantly obviously.
But since the Fed and the OCC also have ability to enforce this act, have you thought through using this tool for actions that you may find to be unsafe or where individuals might have received financial benefit with willful disregard of the safety and soundness of the underlying institution?
I think, Senator, your question raised two questions, one about where we are now, but an important one about going forward as well. With where we are now in respect to the compensation issues, by and large, as you know, those have been for TARP recipient institutions. Those have been things that are either congressionally mandated or put in place by the Treasury Department. And so far as I'm aware, with respect to institutions over which the Fed has regulatory authority, there has not been thought of going beyond the congressional and Treasury policies on compensation. I think, though, that the larger question you raise is one, again, of regulatory gaps. You know, in order, as Chairman Bear said, in order to be able to exercise any authority, you got to have the basic supervisory structure in place. And so as we think going forward about where problems, which we can't anticipate today, are going to arise, it underscores the importance of making sure that each of these systemically important institutions is, in fact, subject to the kinds of rules that you're talking about.
Mr. Dugan, I know our time's about expired, but I just...
Yeah, well, we have a range of tools, of course, both informal and formal, for a number of different things. But in the compensation area, to find willful disregard that causes a safety and soundness problem is in fact a quite high standard to meet. There is separate authority under Part 30 of the Federal Deposit Insurance Act, the so-called safety and soundness standards that were adopted in Fiducia, that also, somewhat lower standard, but still tied to the safety and soundness of the institution, that you could make a connection to. And we do look at these, but as I said, to make that connection to the safety and soundness of the thing is not an easy thing to do.
My only sense, and I'd love to pursue this a bit more, is that we all understand we've got to fix this problem on a prospective basis, but there is still an interim time between now and when Congress would act and these new rules and regulations would be in place. I would just urge you to perhaps revisit with your legal staffs this tool, because as we've seen, it's not healthy for the public's confidence in the overall financial system when we see the kind of excesses and everybody saying, we don't have any tools to go after this, when it appears there may be at least partial tools still here.
And I just wanted to reemphasize what it indicated earlier about our inability to have a resolution authority that it applies
Absolutely.
to. Then there's
Very
a very
valid
broad
point.
authority. You repudiate these contracts. You don't have to make this type of showing that it's really pretty much the discretion of the receiver conservator. So I think AIG is a good example. If the bank regulators had resolution authority of the entire organization, probably this problem would not have.
Very, very valid point, but again, we still have some interim period that may be a long period of months, and if the public has lost all confidence in the fairness and soundness of the actions of some actors in the financial community, it's going to make our challenge and task in terms of striking that appropriate balance between the free market system and an appropriate regulatory oversight even more difficult going forward. So thank you very much.